Hello, everybody. My name is Graham Elwood, and you are watching the Papow Political Vigilante. Commissioner Gordon put the PV in the sky. I come running. The show goes live. Thank you for watching. This is the People's Channel. You guys are the best and smartest fans on the interwebs, and I appreciate you supporting me in so many ways. Super chats are back. We go live 7 days, not seven, but several days a week, usually 3 to 4 days a week. So join a live stream if you can. And if not, you can support us any number of ways with super chats at patreon.com/Graham Elwood or rockfin.com/Graham Elwood. And like and subscribe and share. When you share the videos, that really feeds the algorithm the most. And one of the things I want to try to educate everybody on, I really started doing this when the pandemic first hit 3 years ago, is how I talked about it before then, is to be prepared for an economic collapse. It's why I'm not, this is not financial advice. I'm not a professional financial advisor, but I am a proponent of Bitcoin specifically, not crypto, but Bitcoin specifically, because I think it's a hedge against inflation and it's decentralized and uncorruptible. But that's why I, have bank accounts in credit unions, because I don't trust the big banks. But one of the reasons I think that things are, looming or ominous is because, we've talked about it before the pandemic. I talked about there was a car loan bubble in 2019 and 2020. And guess what? September had the highest number of credit loan defaults. That's not a good sign. And over the summer, I showed you a video. There was like, oh, the spending, the economy is doing great over the summer. Well, I showed you in September that actually that was paper that was propped up. It was a lot of people spending. The credit card debt has gone up over the summer. That's not a good sign either. That doesn't mean we have a vibrant economy. That doesn't mean wages are up. That means people just decided to go out and have fun over the summer and go on vacation and whatever else, and just decided to put it on a credit card. And there's a lot of other things. There's a definitely a commercial real estate bubble that's coming. But I did a video recently about how the BRICS countries have all been selling their U.S. Treasury bonds, which is basically they were buying U.S. debt, believing that America is an economically strong company. So when countries start selling that off, that means they don't have a lot of faith in it yet. So Max Kaiser, who we've had on this show, I'm going to see him this week at the Pacific Bitcoin Conference in Santa Monica, October 5th and the 6th. That's being put on by swan.com. I interviewed Corey Klepson, from the CEO from swan.com. Please watch that interview. It's on the Bitcoin crypto playlist. But this is why I follow Max, because Max is not just some guy. He, was a stockbroker. He knows finance. And he's been right. He predicted the FTX thing when he was on my show 2 years ago. He predicted it a good 15, 16 months before it happened. So I follow him because he's really got his fingers on the pulse of this. So this is what Kaiser just posted. This was a interview on CNBC. So let's play this interview.
Anniversary dates, very key. And I can't help thinking about September of 81 when we had the all-time high closing yield just shy of 16%. So what I'm talking about here might be dancing between the raindrops. You never want to go against a market that is burning to the upside, but you might want to give it a pause if it looks like it's going to back away a bit. But in the grand scheme of things, I think rates are going higher. So let's go to the charts. Like I said, not my best work, but high, low, perpendicular, midpoint. We always pay attention to those, especially when one of those points is the all-time low closing yield at 0.5%. So you take the high, you take the low, you connect it, you find that midpoint, you draw a perpendicular line. And what you find is it just keeps you on the straight and narrow. Those are very key. The more important the spike levels are, whether it's a key high or key bottom, those make it work that much better. Now, this chart is really off scale. Remember, when you're doing these charts, you got to use logarithmic paper. This is just a rough gauge, but there's your near 16%, SEP 81 for your anniversary date. And the whole point of this chart is that we have a lot of potential room to run to the upside. So if somebody asked me and held a gun to my head and said, listen, the worst case scenario, where Treasury rate's going to go 10-year, I'd say in the next 7 years, you should be able to see 13.5%, 14%. Yes. Now, I'm not saying we get there, but I really want to stress you do not.
You hear what he just said. In the next 10 years, we'll be at 13, 14%. Remember now, in the early 80s, we got as high as 16%. Okay? So I'm going to show you in a second what Max Kaiser says about that, but this pay attention.
I want to jump in front of this right now, but if this week closes under 4 3/4 and the high yield close remains in the 460s, you buy the market looking for a bit of a retracement to potentially get back down to 4 1/4 to 432. Or if it gets to 4 3/4 on a closing basis first, you liquidate the trade.
So you buy TLT below those levels. In other words, beta and yields are going to go down in the short term. Otherwise, we're looking for. Why are rates going higher? It's because the economy is gangbusters, easy. Or because
Tyler Matheson. Everybody clap for who loves Tyler. I love Tyler. And what did he bring up today? A great Chicagoan, Milton Friedman. And when he did, one of my 50-year veterans from the trading floor called me and said, "Boy, he's spot on." I had many meetings with Milton. That if you want to know where inflation is taking the markets and why, just look at government spending. The vigilantes have new horses and they're riding, and I really do think that is the answer. We are spending too much. We are not learning to cut back. As a matter of fact, I think we're out of control as we approach a $2 trillion deficit, and this is the market's way to get Washington's attention.
That's always been the case, though, hasn't it, to some degree, Rick? So
why QE changed everything.
Yeah. Right. So do you think that the Fed, whoever the Fed may be within the next 10 years, is actually going to allow a rate that is above 13%?
You can squeeze a water balloon 9 ways from Sunday, but eventually it pops out somewhere. They are running out of little tricks to pull out of their bag. And in my opinion, the quantitative easing removed many signals in the market that now it's trying to put back in place. And they could do as they wish. If they keep tinkering with this, the problem is we have too many large economies that are going to be in the same boat. And who's going to end up buying this paper?
Right. So the presumption here is you think the Fed put is done, and it requires the discipline for the Fed to stay the course. And I agree, and I'm a student of history, probably less so than you, but I think all the way back to the first shenanigans, I think of long-term capital, and I think of the Asian financial crisis, and I think that's where monetary accommodation went out of control, and I think it wasn't the 2007-8, I think it was 1997-98. BOJ, I think they're the biggest wild card here. And I heard over the weekend stuff that told me YCC is done. And I think that's a slingshot to U.S. yields higher.
Oh, absolutely. And the Bank of Japan could actually pull the plug that drains the water on everybody's bathtub. And that's the real fear I have, is they have no idea how they could be the catalyst. They could be that one ping pong ball you throw in a room with a bunch of mousetraps with other ping pong balls. And then all of a sudden things start flying.
Mousetraps and ping pong balls.
So, Rick, let me ask you. So let's say rates just keep going up so much that they crush the economy, right? And so then do we start to see rates really come back, or do you see stagflation and
I think Guy hit part of it. 1987, when we were in the pits, what we learned was that when equities get really ugly, you see the treasury complex start to do better. I think the signals being distorted has changed that to some extent. And it's going to have to get much uglier to get the attention of the bond market. But I think that dynamic will come to the rescue, but it's going to come to the rescue late in the game.
Karen mentioned that we've had rates at these levels before, which I totally agree with. It's a rate of change thing, though. And think about 15 years of being conditioned liquidity, zero interest rates. People are not prepared, in my opinion, for what we've just seen over the last 18 months. Speak to that.
Oh, yeah. Not only are they not prepared, I think that when many look at the markets and they scratch their heads, they just don't understand that the Fed held the beach ball underwater for so long, basically a decade of zero that shouldn't have been at zero, that ultimately the force that this thing's popping out, I think, is justified.
If it pops to 13, if the trajectory is very steep, does that imply that the bounce back is going to be steep as well?
Absolutely. Absolutely. The 1/3 or 2/3 retracement on some of those GAN numbers should be every bit as aggressive. That's why I do think we're going to get a pause. Yeah. And I think we're going to consolidate here. But I urge people not to try to pick tops and yield. Let the market tell you you can dance between the raindrops a bit.
Okay. But again, your big call tonight sounds like north of 13% in the next 10.
And that's the grand scheme of things. Yes. When I take a look at the long-term monthly charts, that's what I see.
Rick, it's always great to have you.
And you're.
Wow. So here's what Max Kaiser said. Haha, the 1981 10-year bond high of 16% discussed on CNBC today in context of recent rate moves. You heard it here first, folks. Plus, USD moves way higher. Gold moves lower like it did in the 80s. Sorry, Franken. Danelia. Bitcoin is on its own vector and driven primarily by its relative non-ownership institutionality. This is the beautiful thing of Bitcoin. It is decentralized. Whoever created it, Satoshi, was a person or persons. This is why they created it, so it cannot be manipulated. Other cryptos are not really that decentralized, because if you have a CEO, it's not decentralized. Bitcoin lives on the blockchain. There will only ever be 21 million Bitcoins ever mined, ever. There will never be one more than 21 million, right? So Bitcoin will continue up in a completely non-correlated trajectory simply because it took 14 years to get recognized as a legitimate asset, which is true. Bitcoin has been out since 2009. Now it's being finally looked at as a legitimate asset. There's quotes from all these big finance people in 2015, 2016, 2017 saying Bitcoin's a Ponzi scheme. It's not this or that. And now in the last 3 years, they've all been putting their institutional money in. This is why I say this is why I'm a proponent of Bitcoin. It's not because some tech bro gamer says it online or hacker or whatever. It's because institutional money. And when, these big companies start putting 5 to 10% of their assets, which if they are worth hundreds of millions of dollars or billions, you're talking about tens of millions of dollars or hundreds of millions of dollars going into Bitcoin. They would never put that kind of money into something if they thought it was a Ponzi scheme. Never. A 10 trillion market cap for Bitcoin is in the bag no matter what the macro picture is. And I'll explain what that means. So when Max Kaiser was on our show 2 years ago, he talked about there is $400 trillion in global assets. If you add up everything, everybody's savings account, everybody's 401k, gold, all these hedge funds, stock market, all of that, you add all of that up, it's $400 trillion, right? So if Bitcoin, and what he said on my show, he goes, if Bitcoin just gets to what right now, Bitcoin is about 300 billion market cap. It's not even a full $1 trillion. If Bitcoin goes to 1% of the global assets, that's $4 trillion. That is massive. That would send Bitcoin to somewhere between $500,000 to $1 million a coin. So what he's saying, what Max Kaiser is saying, with these interest rates going up, like this guy just said on CNBC, this is CNBC. This is not some crypto bro channel. This is CNBC saying this is what it looks like. It looks like what's going to happen in the 80s. So if the interest rates keep going up and up and up, which they do, eventually people, an institutional, and are going to be putting their money into Bitcoin. And as the Bitcoin price goes up, which it will in the next year, especially with the halving, the Bitcoin halving is happening in April. It happens every 4 years. Where built into the equation of Bitcoin mining every 4 years, the number of Bitcoin that can be mined gets cut in half. To increase the demand, they reduce the supply. They built that into the equation. I'm telling you, this is my opinion. Bitcoin was done by an NSA cryptographer. They were really brilliant. So when the halving, every time there's been a halving, and there's been 4 of them thus far, Bitcoin goes on a 12-month bull run. The last Bitcoin halving was in like April or May of 2020. What happened? Bitcoin went from, well, it was at $4,000 when the pandemic hit in March, and a year later, by 2021, was upwards of 60 to its all-time high of 68, 69,000, whatever that is. So this is why this is important. And I know this sounds like a lot of like finance talk, and I understood most of what that guy said, but not everything. I'm just a comedian, but I'm a comedian who lost his home to foreclosure in 2010. I'm a comedian who got crushed by the system, 10, 15 years ago. So this is why I would try to pay attention to this. This is why I would, if you can, not financial advice, put 5 to 10% of your assets into Bitcoin, because when the interest rates keep going up, inflation is just going to get worse and worse. I'm not saying this. The guy in CNBC said this, and Max Kaiser said this. Follow the money, connect the dots, get the truth. And that's how we make Gotham great again. Go to GrahamElwood.com to support what we're doing. I'll be at the Adopting Bitcoin Conference in El Salvador, November 7th through the 9th. Comedy show November 8th, the Bitcoin Hollywood comedy show that I am putting on. Mona Sheikh is on the show, and Max Kaiser will be performing there. Save 21% by using coupon code Elwood21. Shave your knuckles for justice. Boom.